Hello, everyone. It's Dr. Brian, the owner of Libertyville Wellness Group, where we do chiropractic, physical therapy, medical massage, and we help people lose weight. And today I'm here with my friend, Brent Kenyon. He is the mortgage guy from my networking group. He's been doing mortgages for how long, Brent?
This is my 21st year.
21st year. And you're
Yep.
with Mutual of Omaha, but you're based in Libertyville?
Based out of Vernon Hills, Illinois.
Vernon Hills. Okay. So that's where their new office is, and they just moved not that long ago. How long ago did you move into that location?
We've been in the Vernon Hills location for about 5 years, 5 or 6 years, actually.
Okay, so I'm a little bit behind the times on that one. I apologize. So Brent's been gracious enough to kind of walk us through mortgages, interest rates, from a new home buyer standpoint, from an investor standpoint, and then hopefully none of you are in this situation, but we're also going to go over some of the foreclosures or short sale situations that some of the people out there might be going through. So thanks for doing this with us, Brent. I really appreciate it. So let's start out like I'm a new home buyer. What's the process? How would somebody get started? What tips would you give them, especially in these unusual times?
Sure. So the first step, typically what I see, the first step is someone calls a realtor. And then usually that realtor will get a hold of the borrower. I'm sorry, they'll direct the borrower to a mortgage loan officer for many different reasons. First and foremost, because they want to make sure that they're approved to buy a home that they're looking for, right? As well as make sure that they're building a budget with that loan officer. So that way they can look at properties that fit within that individual's actual budget, so they can sleep at night. Ultimately, when you put your head on the pillow at night, it's the customer that's buying the home that has to be comfortable with that dollar amount. So that way they're able to sleep at night knowing that they can pay their bills, their mortgage is going to be paid on time, so on and so forth. So typically that does go to a realtor first. However, I would suggest that should really come to a loan officer first. And the reason I suggest it goes to a loan officer first is because we want to be able to set you up for success. We want to be able to build that budget with you. And when you go, most people go online to look at homes before they actually go out and start looking at the homes. They're like, oh, this one looks really great. This one might fit all of my categories that I want on my home purchase list. Well, what is the number that's tied to that? Well, it's going to change property to property. There's going to be different tax rates for different communities. There might be homeowner association dues tied to that. Different purchase price points, right? So 300,000 or 200,000. How does that affect your monthly payment, so on and so forth? So building that budget from the get-go is really an important thing, which is why I always suggest to people, reach out to a mortgage loan officer, mortgage banker, and go through the options first and foremost.
So if somebody was considering it, the old rule of thumb was that you have to have 10% down, but there are some newer programs, newer in the last 10 years, that change some of that. So could you go over some of the different interest rates people might be able to, or not interest rate, percentage down they might be able to use?
Yeah, great question. So the mortgage lending world has really taken some rides since I started in the industry 21 years ago. And typically speaking, most people used to think you had to have 20% down in order to get a house because you would not have mortgage insurance, so on and so forth. It's no longer the case. So it depends on the product that you're using. Veterans, we do a great job with VA loans, and veterans have the ability to put as little as 0% down. Okay, so there is a 0% product that exists, but you have to be a veteran. You have to carry a DD 214, a certificate of eligibility, which basically shows that you were in the military and you qualify for that VA loan. So that is the lowest down payment loan available. The caveat is you have to be a veteran. Then if you're just anybody else who's looking to solidify a mortgage, there are some great products that are as low as 3% down. Okay, Fannie Mae and Freddie Mac are the two largest securitizers of mortgages in the U.S. And those 3% down programs are really driven by them. The catch on that is one of the borrowers has to be a first-time home buyer. Now, when I say first home buyer, I don't mean it has to be the first house you bought. It has to be the first purchase that you're making within the last 3 years. Okay, that's what qualifies someone for a first-time home buyer. One of the nice things is if you do qualify for that, 3% down, no problem. If you have great credit, you'll have nice reduced mortgage insurance, which is fantastic. But yeah, from there, 3%, 5%, 10, 20, 99%. If it's 100, you're probably not going to call me.
Probably not. And I don't know that many people that are offering 90 to 100%, but I guess they're probably out there somewhere. So once they do get pre-approved from you or another loan officer, and then they start the negotiation process, after they start to close, how does your team facilitate that process? What do you guys do to help them make sure it gets to the finish line?
Yeah, so and that's another great question, great point. So one of the reasons that we've been so successful over the years is preparing your clients properly, and that starts in phone call number one. You have to talk about the process, enlighten them as to what obstacles they may have to overcome, right? If they're self-employed borrowers, there might be more obstacles to overcome than if you're a regular W-2 employee that works for, a large company. So setting those expectations up front is the key to success. Okay. And then it's just I call it a 7-step process to success, right? Which is the process of getting pre-approved all the way through the closing. I can only speak for my company and myself, but I know that when I work with my clients, I work from the first call through the finish line, which is through the closing. I don't hand them off to a second in charge or a processing team that works for me. We answer all their questions that they have right there, first and foremost, in the first call, as well as the very last call as well. So preparing them with the right information in the beginning is the most important thing for a successful transaction to be accomplished.
So I guess the next group of people that might be interested in calling you would be the refinance crowd. So there's all these news articles about the interest rates being cut and being cut to zero. What does that actually mean in the real estate world?
Yeah, that's a great question. So, and I do have over 21 years, I've accrued quite a few clients. And I do get text messages all the time saying, "Hey, Brent, how do I get those 0% interest rates?" So that's a great question, Brian. There is no such thing as 0% interest rates. When the Fed cuts the interest rate, okay, they're cutting the Fed funds rate. And what that means is that they're cutting the federal funds rate in which they're going to lend the institute's money. Okay, so we're not getting interest rates at 0%. Okay, the Federal Reserve is not cutting mortgage interest rates to zero. What they're doing is cutting the Fed fund rate. Okay, most recently to 0%. Okay, this is more due to the coronavirus, the 0% cut that they've had. It's more like an emergency type of a cut because business is not as usual as it has been in the past. And so there's got to be a little relief out there, right? You're a small business owner, you would understand this. As your business, I would assume, is not as flourishing as it had been in the past 2 months, let's say. You still have obligations that you need to pay out, right? Rent, electric, vendors that supply you with medical equipment, so on and so forth. So those funds and like your home equity line of credit, that will be affected by that federal funds cut rate. Okay. But really what we're typically following is mortgage-backed securities and how they're being purchased in the secondary market. And that's kind of driving really right now what interest rates have looked like. Don't get me wrong. Rates are fantastic. They're at historic all-time lows, right? So interest rates are somewhere in as low as 2.875 to somewhere like 3.375% for the very best of the best with credit, equity positions, so on and so forth. And I give a range there because obviously there's a lot of things that can manipulate that teeter-totter one way or the other. Cash out refinance. It depends on what the different product that you're trying to take advantage of is. But yeah, no, it's definitely been an eye-opening time. It's definitely been a roller coaster to say the least. But it's been also very good for long-term rate coupons in mortgage interest rates to be able to take advantage of these low rates at this point in time.
So as we talk about maybe some investors that might be looking, or people that have never been investors but are in a leveraged position right now, for that have never done it before, how much percentage down do they have to have in order to get a secondary home that would be more for rentals or even a multifamily home?
Yeah, and that really hasn't changed much, to be honest with you. So you're still looking at about a minimum of 20%, but for the best interest rates and whatnot, because investors are obviously very cash conscious as they're trying to set up a mortgage for the long term here. If they're going to be taking on rental income, so on and so forth, you're really looking at 25% down minimum to get a very aggressive interest rate. So I would say 25% down gets you kind of to the point where you can solidify one of those great interest rates, is obviously as long as the credit is strong as well. So I would say 25% down is really the right way.
And then on the opposite side of that coin, there are obviously a lot of families, unfortunately, struggling at this point. So, what is the process to get a secondary mortgage or cash out refi? How would you go about that process if you are temporarily unemployed, furloughed, or maybe even longer term unemployed?
Yeah, good question. So my company, Mutual of Omaha Mortgage Company, does not do home equity lines of credit or secured fixed seconds. But what I always say to my clients is reach out to me. So reach out to your mortgage loan originator and ask for their trusted opinion on who they should talk to. Usually that person has a relationship with your mortgage banker, and they specialize in those home equity lines of credits or those fixed rate seconds. So I would suggest you reach out to that mortgage loan originator just because they're going to be able to give you a nice warm lead of somebody that they know, like, and trust.
Okay, perfect. So, and then on the last side of it, the short sales, the foreclosures, any words of advice to help people try to avoid those situations, or how to work with their bank, maybe from an insider's point of inside the bank, not insider like bad insider, but
Gotcha.
you work for a bank for a long time. So how to best navigate that unfortunate time?
Sure. Well, the first thing is you got to pay your bills. That's how you avoid it.
Yeah.
Um, but getting rid of the obvious here. Listen, we can't always expect something like coronavirus, right? Or losing a job, or maybe losing a loved one, or many different circumstances that come about. The first step that I always say is reach out to somebody that you know, like, and trust. Hopefully, you've got that relationship built with a mortgage professional that can guide you and give you some good information. I can't tell you the amount of times I've gotten calls from someone and said, well, I called my bank and they said I have to start missing my payments. And after my third missed payment, then they'll talk about deferring some of the payments or starting, the foreclosure process and stuff like that. Or even forbearance. And again, forbearance is actually a very hot topic right now because with people, unemployment so high right now with the current state of the economy and what's going on in our world. A lot of companies are offering forbearance options on the mortgage. Now, what that forbearance option is basically is they'll defer the next three payments to the back of the loan. But be very careful. Fannie Mae and Freddie Mac are very specific on how they are going to handle people that opt to take advantage of the forbearance payments. Okay, I don't believe that they're going to keep it as a like a pre-foreclosure, where it's kind of been looked at like that in the past. Again, this is a snapshot in time that we're all just trying to survive through. But what I would suggest is call somebody who you can have a very frank conversation with to see how it's going to affect you individually.
Yeah, and that's a great comment. I mean, most of us aren't mortgage experts, but obviously, you are. You've been doing this an extremely long time, which is pretty a great strategic position to be in. Obviously, you've kind of had to transition to this online format as well. Have you? What words of advice would you give for people that are trying to interact on social media and on Zoom and to keep a hold of their clients, loved ones, any words of wisdom they have?
So yeah, I would just say, it's really important to build that trust in that relationship. We're kind of forced. I love sitting down face to face with clients. That's just me personally. I've done it that way for a long time, but it's just not an option right now, right? But people still need advice, and people still want to take advantage of these great interest rates, and people want to know that they're not being taken advantage of. So that's why I say it's very important to ask a lot of questions. Don't think questions are dumb. I get that question or that comment all the time. Hey, this might be a dumb question. There is no such thing as a dumb question. A dumb question is a question that's unasked, because people aren't experts in mortgage. The same way I'm not an expert in chiropractic medicine, I would have to come and ask you for your professional advice and opinion, right? So that's why I always say, ask those questions. It's not a dumb question if it's a question, because it has to be answered for you to feel fulfilled with that. So I say, spend the time, ask the questions, interview your mortgage professionals the same way they're interviewing you on their end, right? There's reason that we ask a lot of the questions that we ask, and I don't want to say that they're loaded questions, but they help us get to the answer for the next question that we're probably going to ask. So just be very communicative and very collaborative with your mortgage professional.
That's great advice. And then we'll kind of go over how to get a hold of you. So, what is your guys' website?
Yeah, so we're Mutual of Omaha Mortgage. Um, uh, I have a personal landing page. So it's Mutual of Omaha. It's my Mutual Mortgage. Actually, I want to give the personal one, because otherwise I'll send it to the landing page of the company and they won't be able to find me. But
Okay,
it's just
yeah.
it's Mutual of Omaha Mortgage Company. And then if you click on the top, you'll see that there's bankers, and they can select me as one of the vice presidents of mortgage lending, Brent Kenyon, from the Mutual of Omaha Mortgage website.
Okay, and then what's your email address?
That one I got. So that one's just B Kenyon, Kenyon, at Mutual Mortgage. Mortgage is mortgage.com.
Perfect. And then what's your business number?
Yeah. So, and I always say, people reach out to me on my cell phone. Okay. That's the easiest way to connect with me. So my personal cell phone number is 773-410-0696. Again, 773-410-0696. You can text me, email me, send me, or call me on that number, day, night, weekend, holiday, whatever works. We're there to help you guys out.
Yeah, and I can't speak highly enough of Brent and his team. So make sure you guys give him a call if you have any questions on home mortgage, real estate. He's been doing this a long time. He's a great expert in this topic. I've asked him several questions throughout this on what the best strategic moves are. So don't be afraid to reach out to him. And thank you all for tuning in. Make sure you like, comment, share, and then follow Brent on his page. They put a lot of great information on the overall financial markets out there as well. So hope you all have a great day, and then I'll talk to you all soon.
Thank you.